Hey guys, Boris Lastwick from BK Forex. Welcome to our weekly technicals. Euro possible comeback for the week of 3/17 to 22 of 2013. Past performance not indicative of future results. Trading Forex carries high level risk may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leveraged products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you can sustain a loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. The information, including commentary and trade ideas provided on bkforex.com, should not be relied upon as substitute for independent research. It should be informed before making investment decisions. BKForex LLC and bkforex.com merely providing this information for your general information. Information and opinions presented do not take into account any particular individual investment advisors, their situation or needs. All investors should obtain advice based upon their unique situation for making investment decisions. They should tailor trade size and leverage according to their personal risk appetite. We're not responsible for any loss incurred on investments made by readers and clients as a result of any information contained here. It would not render investment legal, tax, or other professional advice. If such advice is needed, please seek services of a competent professional. I want to start today with the euro because I think that's been a most interesting trade, especially end of the week on the turn. So if you look at the daily chart, the first thing you see, I think, is a very, very strong shelf of support. If you put the line at 29, you see everything came down and nothing could be broken. They simply threw everything but the kitchen sink at the euro and could not break the 29 handle, which comes to around basically there's a 28.80 support here that held and is now starting to turn. Now, if you look at the more granular level, the 4-hour basis, what's interesting about this trade is that it's held, but we are now approaching very, very critical resistance or turn levels because this 31.50 right here is a moment of truth. If the euro has enough power to blow past 31.50, then we have a reasonable chance to really actually move all the way out to 33 and 33.50. That would make a wide bull turn, and it would suggest that the turn here is not so much consolidative, but is actually a much stronger short covering squeeze to the upside. But that's really where the question lies next week: is how well and how strong are we going to be relative to this 31.50 level? It has tremendous amount of resistance. So those people who like to trade resistance, this is certainly a very low risk probability trade with shorts anywhere in the 31.25s against a 31.75 probably is where the reasonable stop would be, because at that point, if we blow through 31.75, it's very likely we've now created a new thrust leg forward towards the 33 handle as the euro continues to churn higher. On the other hand, if we just sort of dip down, not necessarily a question of complete a demise, but more perhaps of just continued churning. The critical thing, I think, if we turn down is where do we end up? If we end up, let's say, in the 130s and then turn back up, that would make a higher low, and therefore would suggest that we have more juice now for a further thrust to the upside. So there's a lot of permutations of how the euro is going to trade next week. The critical levels first to look at is obviously 31.50, but even if it turns down, the question then is going to be the ferocity of its decline, because if it turns down and just simply finds more buyers in the 30-100 area, that actually would create a pretty bullish construct, because it would create higher lows and suggest that we could have a burst higher as the week progresses. So very much worth watching, obviously. Really interesting development. Similarly, a very interesting development in the dollar yen, because this is something that we've been talking about during the week, and I think it's starting to really come to fruition. The key critical idea here is that we could not clear, we made all-time highs, could not clear them, effectively made a double top in a pair. And more importantly, once we made a double top, we just had absolutely no juice to go higher. We now broke the 95.50 level, which was the critical support level here, and have just barely tested 95. I think the 95 break here, which is imminent, and it looks relatively reasonable as we go forward, really opens up a stronger and steeper decline towards the 94s. Now, the thing about the yen that's very tough is that as you can see, yen basically goes up in a staircase, comes down in an elevator. This is one of those kind of things where you can have a very serious flush very quickly, perhaps even on a Sunday night to Monday morning, where all of a sudden all the late longs get caught in a downdraft, and you're going to have a whole bunch of stops getting blown out, and this could actually go 94, 93 in a very, very quick succession. If it holds here, and if it holds the 95s, that actually could give you a pretty bullish signal, because it means that they aren't able to trigger a lot of the quick stops to the downside, and we'll pretty much then trade in a consolidated fashion. But to me, this is not a buy until and unless it breaks the 96.70 level. Until we make fresh highs, this is a churn within a lower distribution pattern, and therefore every rally is a sell until the highs are broken, and every break is a possible sell to the downside as we go forward. So yen looks interesting, really on the short side as we go forward here. Cable, this was an interesting story, because I think as we were talking about in our BK trading room this week, almost nobody, and I think this is one of the things about FX that makes it so interesting but also unpredictable. I don't think anybody in their right mind would have woken up on Thursday and said, hey, we're going to have a 200-point day in the pound to the upside. But this is what happens when you sort of have this confluence of short covering that just squeezed ourselves. But notice where we kind of petered out. We petered out again at this critical 52 level. And that's going to be a big, big tell. In order for the pound rally to truly, truly recover, the 52 needs to be taken out. So let's go on the longer time dailies. Take a look at this. You see how 52 is a serious shelf of resistance here. So we clearly couldn't come to the 52s just yet. See how this trades out in the first couple of days of the week. But a break above 52, let's say on 52.20, should be a very, very positive sign for cable, and would suggest that we have essentially a V-shaped bottom with a strong, strong recovery. On the other hand, resistance traders, obviously this is a relatively low risk area here, anywhere within the 51 to 52s. If you believe this is a full resistance area, and an unwind back down to the 50s as the week progresses. So trading it both ways definitely has some interest here on cable. Let's take a look at Aussie, which definitely had a strong and powerful move. So Aussie spike low. This is one of those things that happens rarely, but is very, very usually a very, very good tell sign. This is obviously a hammer handle. Typically signals a change of trend, where you go to the market quickly flushes to the lows and then ends up on the highs. Very strong indication of change of trend, and it's exactly what happened in the Aussie a couple of weeks ago. Now, what's happened now is that obviously fundamental data has helped push us higher, but what's interesting is that fundamental data helped push us higher through, let me just make this much clearer, through the very critical 103.50 resistance. We broke that resistance. We're clearing 104s, and really the Aussie does not see much resistance until the 104.50, 105.50. Now, getting into this area is going to be very, very challenging, and I think that's going to be a sell, not a buy, above 104.50s, because you have just the first natural resistance level here. But for now, all systems go. It looks very positive for the Aussie, and the Aussie looks like it really wants to go towards 104.50, perhaps 105, before this particular leg of the rally starts to lose a little bit of momentum. If we look at the caddy, also showing some strength. Now the caddy was interesting on the flip side. It's been, it had a very strong, after the BOC meeting, it had a very, very strong up leg. The CAD really, really weakened. Went from below parity to above parity, and ran all the way up to basically 103s. But at 103, 103.50, let me just go to the 4-hour chart on a longer time basis. You can see this much better. Okay, here we go. So 103, 104.50, it started to really stall. It stalled at, right above 103.50, came back down. Tried 103.50 again, came back down. This was a positive CAD employment data. Broke the 102.50s, but just could not really hold it, and then sort of consolidated, and then finally 102.50 was given, and now the 102s were given. So in many ways, the CAD is really starting to unwind and starting to turn seriously. Where the bottom on this particular leg is, it's hard to tell, but certainly the first natural trade is 101. And obviously, if the caddy finds tremendous amount of strength, it can go to parity. But generally, it's trading well as commodity dollars, catch a bid. And this 102.50 break, which we talked about last week, was seminal, was absolutely critical in terms of establishing a stronger, more downside draft. For now, obviously, the longer term trend, the longer term high at 103.50 holds, and a potential target towards the 101 is where the caddy is trading. So that's kind of how the week shapes up. There's a lot of very interesting two-way action, lots of different scenarios to explore. I wish you guys the best of luck. Please come join us at bkforex.com. This is Boris Schlossberg, over and out.